Europe Property Investments owns properties in Romania and other Eastern European companies.
So this one is NEPI, right? So the South African group associated with Resilient, Capital Properties, Fortress, Des de Beer, his colleagues took this business plan about a decade ago global. What they've done with South African malls, they went into Romania and they've built from there a portfolio worth 52.7 billion rand.
And very good, as you mentioned, some big names in the property space backing this one. So great pedigree when it comes to the property environment. Market cap, 52.7 billion rand, historic yield of 3.5%. NEPI has been much spoken about of late.
A huge success story, really has worked. If you look at, it's got a good yield, 3.5%. Again, in other currencies, in euros, as opposed to the others which we spoke about is pounds. So I think that's an important distinction. But if you look at the yield's good, as I say, but the capital appreciation over the medium to long term has been phenomenal in these shares. So it really has worked. And that differentiation and almost that Eastern European coming of age and experiencing a modernization in the shopping mall era really has worked.
Have you called this one correctly?
So as we spoke earlier, I don't really focus on property stocks. It's a sector I prefer equities, pure equities. But this one has really been good, and I'm sorry that I didn't call it.
Well, let's look at the share price graph.
Yeah, another tremendous chart. It's got a little sideways at the end, so showing a little bit of tiredness. It certainly was one to own though, and it's in the All 40 on account of its market cap. And it's done very well for its anchor shareholders, who are the various representatives of that Resilient, Fortress, Capital Properties family of companies, as well as people like the Government Employees Pension Fund and the PIC. Because again, remember, it's a popular stock to own because if you're running a pension fund, you can own some of these. It counts as part of your property holdings and it's local, so it's not part of your foreign allowance, so you don't have to worry about that because those are both capped at a particular level. I don't know. Look, these countries where they operate, I looked at the properties,
this is the Eastern
website.
European portfolio.
Remember, they're all European Union countries. They're all fairly small by about 10 million population. They're all economically fairly sophisticated, but there was a great opportunity to move out of the high street type retail stuff. If you look at the malls themselves, they all look sparkling and fantastic, and the tenants in there are all of the international companies, H&M, Apple,
it sounds as though you're not going to be able to
Nike
fault
stores,
this story.
all of the other stuff.
You're not going to be able to fault this one.
Well, I don't know. It does come down a little bit to your thoughts about Europe. I don't know whether the knock-on effects of the Brexit is really too much to worry about. And I guess it also comes down to the question of what the yields will be and whether they'll have any economic stress. I don't know. I can't really see it.
Well, let's
Europe?
put that
How does
to
Europe
you,
feel
Lance.
to you?
No, this one is I like this one more. It doesn't have that Brexit problem over it, and there's pretty good value here. Still, it's come off a bit. I think it's a buying opportunity.
So you are calling this one a hot?
Hot on this
Paul,
one.
hot.
Look, I mean, I haven't commented on the Eurozone for a while, but you know the old line that Europe is really France and Germany and everything else is trimmings, I think is correct. I think the fact is it doesn't really matter what the Brits do long run. They can leave. Europe will be fine, and these countries at the periphery of Europe will be fine too. So let's call it hot. Yeah.